All right. So good morning, everybody. So this is just going to be Smart Money Basics, Smart Money Monday with me and Sakina. We are both. Am I pronouncing that right, Sakina?
Sorry, say that again.
Am I pronouncing your name right?
Sakina.
Sakina. All right, I got you. Yeah.
Close.
So me and Sakina are both new educators for Outcome Reach. I know a couple of y'all might have joined my calls before, but yeah, it's the same type of deal. Mondays are going to be Smart Money Mondays, where we're just going to go ahead and give y'all the basic rundown of how this works. A little bit of psychology stuff that might come later, and these will always be recorded in the event that y'all do not get them. So yeah, but just ask questions as you see them, and let's get started. So for those of y'all who do not know, here's what smart money is. Anyone want to tell me what smart money is? I prefer that. Someone tell me what smart money is.
You guys can unmute yourselves as well.
All right, y'all quiet this morning, evening, it's okay. All right, so smart money, basically it is a method, and it's an institutional method. There are three predominant forms of trading when it comes to Forex. You have the retail traders who, use trend lines and indicators and all that stuff. You have the fundamental traders who just look at the news and, something happens off in China. I don't know, they're buying in China. They do that off of the news, what I'm trying to say. And then you have the institutional trading, aka we're trading and doing what the banks are doing with the big large institutions, the people who are moving these billions of dollars every day. We're trading with them. So smart money is all about identifying where they're trading and entering right with them. Does that make sense?
Yeah.
All right, good. Thank y'all for talking. Yeah. All right. So when it comes to smart money, there are three things that we're looking for. Three. So does anyone know what the first thing we're looking for in smart money?
Liquidity.
Liquidity, that's right. Now, what is liquidity? In basic terms, liquidity is support and resistance. And whatever, you have other regional traders calling this support and resistance, that's liquidity. So I'm sorry, I'm ignoring there's some people in the background. I'm sorry for the noise, but right when we're looking at this, here's what you can see. A little bit of liquidity right here, all these equal lows. Whenever a bunch of wicks at the same area or whenever a bunch of bodies at the same area, that's liquidity. But even more, I'm looking at this large liquidity zone right here. Look at all these wicks in here, all hitting this exact same zone. All liquidity. Can somebody tell me why liquidity is important?
It serves as a magnet for price.
Yes, but do you know specifically why it serves as a magnet for price?
Because banks only make big money when they capture liquidity.
Yes and no. It's not that they're necessarily trying to take out liquidity or they're only making big money, but it happens. So that's the correct answer. So when you're looking right underneath all these wicks and all these bodies, all this liquidity, what do you have? Stop losses. The moment these get broken, stop losses get broken. And that brings me to the second confluence of smart money. What is it called when the liquidity gets broken? Someone tell me.
Impulse.
Impulse. There you go. Impulse move. Once again, just y'all feel free to jump in, ask questions, all that stuff. The impulse move is going to be the move that breaks liquidity. It's usually one large candle, although it can be more. And really, the biggest thing you're looking for with the impulse move is a change in structure. So, Sakina, you want to get into the change in structure a little bit?
Yeah, so basically it's like we're looking at the market in waves. So let me just annotate 1 minute. So that red line right there would be the impulsive move. The structure that we are looking at for the impulsive move is this. This equals a lower low because this whole structure right here was formed. Once this structure gets broken, we call that an impulsive move. We like to see a structure that can test it, or what we would call it, mitigation. Also, more basic terms of mitigation is pretty much lessening your losses. So what you want to do is find high probability trades. Now, if you start trading, let me just erase some of this stuff. If you start trading within all of this before price gets broken again, then you're bound to get stopped out. So what we want to look at is, like Kaylin said, is liquidity get broken and then mitigated back into. But always remember, impulsive move is much stronger than a corrective move.
Right. So yeah, that's number 2 is the impulse move. And someone tell me what number 3 is.
OC.
OC. OC stands for outcome candle. Get it? Outcome reach, outcome candle. Anyway, outcome candle, you can have institutional candle, area of interest, order block. It all means the same thing. And what does an OC look like? It is going to be an engulfing candle. So here's what it's going to look like. This is your up candle, right? Let me match my color scheme on the chart. It's kind of weird. I like my purple. That will be the up candle, and this will be the down candle. That's what an OC looks like. Or this could be the down candle, followed by a sharp up candle. Sorry. OCs can also look like that, right? So I want to kind of bring it off to the side so I don't confuse y'all later. This is how this works. So this will be a sell OC, right? Because this is your buy, and this large candle is your sell. Call that a buy to sell. In this case scenario, this is how easy this is, right? Watch this. You're gonna put your sell limit right here at the bottom of the candle, and you're gonna put your stop loss right here.
So how you doing? Good. Oh, thank you. I was just told Chris to go get some.
Be sure y'all mute y'all stuff if y'all not asking questions. All right. So then if it's gonna be a buy, you're gonna do the opposite. Right here at the top, this is a sell to the buy. You're gonna put your buy limit right here, and you're gonna put your stop loss right here. So this should look familiar, because if you come back here to our example, right before your large impulse move number 2, number 3, you have the outcome candle right here. Zoom in on a little bit for y'all. Look at this. Isn't that one of these over here? So what do? Easy. You're gonna put your sell limit right there at the bottom, and you're gonna put your stop loss right here at the top. And then what do you do next? Somebody tell me.
That's
This is what this little phrase I say. Set your limits.
That's your limit. Go about your
Go about your business. Why do I say that? Because remember that trading is a huge psychology game. What people will do is it might take weeks for this to hit. It might take days. Sometimes it might take an hour. Sometimes it less than that. You got to realize you got to mentally separate yourself from the trade. I see too many times where people will just be saying, "Oh my goodness, prices are going there. I'm going to go ahead and enter," and they enter and they get stopped out. Just go on about your business. Let the market do what it's going to do. So you can go on a walk, go play with your kids. I don't know. You can do something. So let's see what happens. This is the 90-minute time frame. I like this time frame. Look at that. Thing fail. Then of course it went back up later. But we would have our take profit right here on this liquidity zone, right? So this is where you put your take profits, right? There are 2 options. You can do it on another outcome candle. I don't see one around here. But what I used to do is I put my take profit on a liquidity zone. Look at all these equal highs, right? That's where I put my take profit. So right there, price hit it, then it shot up. So watch this. This is what's crazy. Look at the risk. In this trade, you were risking 11 pips, and you got 108 pips. That risk to reward is crazy. You see, with this, you can't lose because of the risk to reward that good. You can lose 5 times one trade, and you're still in profit for the week. So y'all go ahead and screenshot this example if y'all would like, just y'all to look at. You got noise in the background. I don't know who got
Mute everybody.
Yeah, you can mute people out. Kyle.
Yeah, so I'm gonna hit mute off. If you want to talk, just unmute yourself. All right. I'm still trying to figure out how to work this whole Zoom thing. Y'all bear with me. But all right, so y'all can go ahead and do that. Sakina, you got any comments?
Not at the moment. If you guys have any questions, feel free to answer.
I had a question, but honestly, looking at this, I think I just like worded it differently. But it's literally just an impulse. If you go back to like the Vault Reach, the Vault FX chat, I sent a chart.
Yeah, let me check it out real quick.
All right, bet. But yeah, nah. As I'm looking, it's literally just like testing structure and going back down.
Ball. Which one was
early? I'm D'Angelo.
Actually, can you do me a favor and forward it to me? I don't want to just
like show them. I got you.
Yeah. And while I do that, I'm gonna find another example and start showing y'all.
Oh, I have a question.
Yeah, go ahead.
Are you able to use fibs with smart money?
Are you able to use what with smart money?
Like, how does using fibs work with smart money?
Yeah, so we actually don't do that anymore. What we used to say is, yeah, you want your fibs to line up with the 0.668, I believe it was. Yeah, we actually don't do that anymore. So you don't even have to worry about that. I don't know what that rustling is. Do y'all hear that? Yeah, 886.
Yeah, I think it's your song.
Oh, okay.
I think that's you, bro.
Oh, that's me. Oh, who talked? Let's see. Yeah, you're right. So basically, we don't use those anymore. Don't even worry about it. Let me check out this chart here. He just sent me.
Oh, so you can stand in the chat on Zoom. That'll be a quicker way.
Yeah, be sure. I'm gonna link y'all to Outcome Reach in the chat. Be sure y'all join that. I was in the back testing peak that's happening. Price tested a lot of the surface to the left, bounced up for an EBD enter. I'm gonna be real. This is kind of a awkward looking chart. So DM, yeah, I'll get back to you this later. Yeah, it's kind of getting off topic, so I'll get back to you later on that. For now, let me find y'all another example to look at. All right, thank you, Sakina. Y'all ask me some questions while I'm looking for y'all an example, preferably in a different time frame. Let's see. EURAUD, why not? And just run through, this can be used on any time frame. If y'all like scalping, you can scalp with it. Personally, I do not like scalping because, yeah, I just don't like scalping. If y'all want to go on a monthly time frame, you can do it. This works on every single time frame. And this is a nice example right here. That's a really nice example. All right, so let's go through it again. This time I'm gonna let y'all tell me what to do. All right, number one, what's the first thing you look for in smart money? Liquidity.
Liquidity first.
All right, what do you see right in this area? Look at all these wicks hitting the exact same area. That's liquidity.
Yep.
Go one up on him. Look at all these wicks right here hitting the exact same area. That's liquidity. Go one up on you. Look at this large wick up here. These two hit the same area. That's liquidity. You got 3 huge zones of liquidity. 3 zones, people got their stop losses there. They got stop losses right there, more stop losses right there, and more stop losses all the way up here. This impulse broke through all 3 of those. So you know some retail traders got ticked off. But you know, when retail traders get mad, we get glad. That's just my phrase for the day. Next, what's number 2?
Look for the impulse.
Impulse, yep. What does the impulse move look like?
A long candle or a sequence of long candles.
There you go. I actually got ahead of myself, what you call what I was doing. Number 3 was the third thing you look actually. Here's the impulse move. And back to what Sakina said, Sakina, look, here's the impulse move right here. It's going to be the break and structure. So here's your structure, right? Look at this. Actually, Sakina, you want to annotate it for him? All right. So yeah.
So this is the impulse. Sorry, bro.
Oh, you're good.
This is the impulse. But what we are looking for now, about being this is so much in one, and it's liquidity here, here, and here. You want to see this minor impulse, test that. I mean, the third one we were saying was OC, turned into a breaker.
Y actually has a very good diagram demonstrating that. So I'm going to try to get that from him later, and I'll be sure to resend that to Outcome Reach. He has like a beautiful diagram. Dylan does too. So yeah, that's the impulse move. Number 3, someone tell me.
Michael Jackson got it. He said OC, outcome candle.
All right, let me leave this chat open. Thank you. Outcome candle, that's right. What does the outcome candle look like? The engulfing candle. We all know what that engulfing pattern looks like. So come down to the chart. Watch this. Entry right about there. And I'm about to get these institutional levels in a minute. Y'all know I'm about to get to it. Stop loss right there. So then, what do you do? Somebody say it.
Set your limits and wait.
Go about your business.
Set your limits. So,
I got a question.
I'll go ahead right quick.
So is it, I would say like the more liquidity zones you find, does that kind of imply that there's going to be a bigger move or a bigger buy?
Not exactly. What we would like to see, period, is liquidity get taken out. So regardless of how much time it spends or not, we want to see that getting taken out. And also we want to be with trend, not against. So if you see liquidity below, you wait for the impulse to break to the upside to get in on the buy.
Okay.
Yeah, but yeah, so it doesn't really necessarily matter how many zones are broken. That's going to determine the size of the move. But I will say this on the other end of it. If you see, let's say you're in an uptrend, right? But you also see equal highs. You see like it's hit that exact same high about 3 times. You know that's a strong liquidity zone. You know the banks are looking to take that out. So you're looking for a move, a possible buy move that's going to allow you to take those liquidity out and ride with it. So if you see zones like equal highs, triple highs, you know that's going to be broken. You need to find an area to enter those. Not saying it's going to have to be one, but you know it's going to eventually be broken. So back to this. You're going about your business. You're at the park, whatever. I don't care. Hey, there it goes. Easy. And where would I have put my take profit? Someone tell me.
On another OC or another liquidity zone?
Another OC, another liquidity zone. So you could have put your take profit right here. And as you can see, price kind of came back down and did a number right there. But I probably would have put mine. There's so much liquidity up here. That's where I would have put mine. So your risk was 22 pips. We usually don't risk that much. 22 pips. Price went up 161 pips. I'm not gonna do the decimal on y'all. Easy, super easy. Now, back to what Michael Jackson said, institutional levels. Yes, I'm getting to that. These, think of this. First of all, screenshot this right quick. Institutional levels, write it down, whatever. Like Matt says, no takers or bread makers. Institutional levels 0, 0, 2, 0, 5, 0, 8, 0. Think of these levels as like the bank activation buttons. I don't know where I'm going with this, but let's just ride with it. Like bank activation buttons. Banks have 4 buttons, 0, 0, 2, 0, 5, 0, 8, 0. Whenever they're about to put their billions of dollars into this market and go with their moves, it's going to line up on one of these levels. Depending on what level, it's going to hit that button. So whenever you set your limit and go about your business, the first thing you want to do is, back to this example. Here's how you do it. You know it's going to be a buy right here, right? You would have put your limit right there. Look at these numbers right here on the side. It's 1.63664. You want to go to your settings right here. And you want to round to the nearest institutional level. So this one, you either got 50 or 80. So let's check 50. Your entry is now at 1.63650. Always put your entry on an institutional level, but never put your stop loss on the institutional level. Why? Why? Someone tell me, why does it make sense to not put your stop loss on the institutional level?
Because that's another area that the bank wants to react at.
Exactly. The institutional level is where the bank is reacting at. So if you're putting your stop loss at the reaction zone, you're going to get stopped out right as price goes in the direction that you want it to be. So you never put your stop loss at the institutional level. Daniel James said, don't forget about spreads. Here's the beauty of this. Institutional levels automatically account for spread. That's the best thing about them. So you need to put your stop loss down here. Check this out. 1.63519. What's close to one of that? 20. Put it after the 20. 1. And if you even zoom in, look at that. Price went right there and hit that 20 for a shot up. So what if you had it on 20? You just got stopped out. Does that make sense?
Also account for spreads, guys. Institutional level, like Kaylin was saying, you still want to put it on one, but you also have to account for spreads. So if it's at 650 and the spread is 10 pips, you want to put it at least on 80 just to make sure that you can get in. Did you guys get that?
Gotcha, appreciate it.
All right. Oh, someone had a question. Sometimes price put your stop loss for moving your direction. Does it mean the OC isn't valid? Yeah, Abdul, that's just institutional level. If you have it on the institutional level, as long as your stop loss is not on the institutional level, it shouldn't hit your stop loss. Now, if it does, then it probably wasn't valid. Or you can hit the higher time frame, and it might be in a bigger time frame. Does that make sense? Like the outcome candle might have been on a bigger time frame, so it might hit your stop loss on a smaller time frame, but it might not on a bigger time frame. You just gotta like check it out. All right, Razia said, I don't get how it accounts for spread. All right, so let's see, Sakina, you want to take care of that?
Yeah, so if you see an outcome candle and it was 63664 and Kaylin put it on 650, you have to account. Now you go on your broker to on your MT4 and see how much is the spread open. And once you find that out, then you go back to the trading view and then you account for spread. So you will put it on 6.8.
You got muted out, Sakina.
Sorry?
He got muted.
You muted out. You missed the last part of what you said.
Oh, I'm sorry. So like I said, if you put it on 680, that should account for spread. Now I know that's 20 instead of 10, but 80 is an institutional level. And with the stop loss, you don't want to do it.
Yeah. And y'all check this out while I'm staring at this. I mean, look at this right here. We can go back for a third time. Check this out. It's easy. Look at this. Someone tell me, what's number one? Someone different. Two of y'all on this call. Somebody can tell me what the first thing to look for is. Liquidity. All right. So look at all this. All these wicks in the exact same area. Ain't nothing but liquidity. Underneath that, people getting ticked off because their stop losses are right here. You want to go even lower? Check this out. Look at all these equal lows. Bam. Equal. Oh, wow. Don't do that. That was weird. Equal lows. More liquidity below. They mad. Number 2, you get your impulse move. Number 3, what do? Outcome candle. And this time we're going to deal with the institutional levels. All right, look at this. You hit it 64805. That rounds to the 00. Change it to a 0. Easy. Stop loss. Right about here. 64999. I think let's make sure it's not 65. Yeah, so you want to put it above the 65. So 65036. Perfect. Risk, that's probably a little high. Yeah. 22 pips. That's because this is a cross pair. Session limits, go about your business. Easy. Probably would have had your oh, and where would you have had your take profit, guys? I mean, where would you have someone tell me where would you have had to take profit at?
On an OC.
On the OC. Look at that. Bam. That's a double move. Look, not only did price go down 100 pips, price is now going up another 100-something pips. Easy, guys. Easy. All right, give me your questions.
So I think you already answered it basically, but so you round down, say like you have a sell limit for OC, you round down to the nearest institutional candle, and then for your stop loss, if your stop loss lands on an institutional level, you round up away from it, right?
Yeah, I'm gonna go through that. That reminds me, I actually didn't go through that actually. Add these people in. Yeah, so this is a buy, right? Let's say you're gonna put your institutional level on this.
Mm-hmm.
Going down, you're going toward the 5-0. Going up, you're going away from it, right?
Right.
So usually, you know, toward the body, you would have the 63650, correct? Follow me here. I'm not trying to get confusing. 63650,
Mm-hmm.
right? But look at all this wick. If it's a buy, you would round up the wick.
Okay.
Up away from the body. Because I see too many people making this mistake. It'll be a huge wick. It'll be all the way down here. If it's a huge wick, you're going to want to round up that wick. Not all the way up here, but somewhat up.
Okay.
So I'll put mine right there, that's 63680. Stop loss away from the body.
Okay.
Now, if it's a sale, you want to do the opposite. This is actually a perfect area because you got 2 back to back. Right here. You want to round down for your entry. Right there, that 80. Look how price went right up to the 80 and shot down. You want to put your stop loss away from the body, up. That easy. It's super easy. What y'all saying in the chat?
Gotcha.
What is the outcome candle? Came in late. Yeah, so outcome candle is the third confluence. This call has been recorded. You can actually go back through and it's going to explain all of it. But the outcome candle is the third confluence. It's going to be the engulfing candle before the impulse move. So right here, the impulse move, this large white candle, the engulfed candle before is this one right here, this purple one. And you would put your sell limit at the bottom of that, stop loss at the top of that. Price came right here. Round down, of course. Price went right there and it, well, not that far, I'm sorry. Price came right up, hit that, and shot back down. Easy 100 pips. Easy, easy, easy. Sakina, you got anything to add? All right, let's check out a different pair. Actually, let's see what's going on right now. For those of y'all. Actually, I don't want to do that because this is going to be recorded, and yeah, people in the future aren't going to be able to benefit from that. Best time frames. Guess what, Trayvon? Guess what? Any time frame. You like the minute time frame? Go for it. You like the day time frame? Go for it. Matter of fact, let's check out a minute time frame. I bet we can find something. Just to show you how easy this thing works. Any time frame. Ooh, that's a nice breaker play, but I don't want to get in breakers. That's gonna confuse y'all. Yeah, look at that right now. Any time frame. Now, I mean, if y'all like the minute time frame, I'm personally not a big fan, but it works. Look at this right here. You round down the institutional level, click. Look at that thing. What was the risk here? Oh, this is easy. You had a risk of a pip. And how far did that thing go down? Let's see. You risked a pip, price went down 20 pips. You say 20 pips ain't a lot. If you risk 1 pip, 20 pips is a lot of pips. Now, another thing that I haven't mentioned, that's Keena mentioned, is that you always want to go with the trend. Never trade against the trend. All right. That's a retail terminology, but it still holds. Never trade against the trend. So, more questions. Let's hear them.
Yeah, remember, guys, every time frame, the market is fractal. So every time frame that they offer, you can find setups on.
How many estimated pairs should we pay attention to? That's all personal interest. Matt, he personally only does USD pairs. Me, you can check out my watch list. I just kind of have them all listed in alphabetical order. I'm not necessarily looking at each pair. I'm only gonna look at AUD, CAD for specific setups. I'm just going through. I actually take about 30 minutes every morning and just go through, see if there's any setups. If there's none, I don't force them. If there are, cool. So that's all the personal preference. Look at as many as you want. Oh, look what just activated though. Look at that. Y'all see how easy this is? That's going on right now. Yeah, any time frame, any pair, don't matter. Yep. Indices, you like them, you can do them. I don't like indices, but you know, some people do. Yeah, look at this right here, minute time frame.
I'd say with indices and exotic pairs, stay away from those pairs until you really master the setups,
Yep.
because you can lose money very quick. It's best to trade the slower pairs like AUD or any Aussie pair, or like Chef or NZD, SEPs for GBP NZD. That's pretty much like a beast out of all NZD pairs. So it's best to go with the slow ones and back test on that, and then master, what you know, and then gradually go on to the exotic and indices.
Yeah, EU definitely one of the best pairs. But these exotics, I mean, once you get good at it, you can check them out. I like EURDKK. It's just you gotta, don't do those because you can lose money really fast, like she said. But just any pair, just so y'all know, it work. You got 4 minutes, y'all. I know y'all got questions, but
I got a question.
Oh, go ahead.
So if you go like on the daily or weekly, on them higher time frames,
Mhm.
and you see the OC, but how do you go about, minimizing how big that stop loss will be?
Minimizing risk. Yes. All right. So usually, let's see if I can find a quick one. All right. We don't have to specifically look for one, but what you would do is, let's just hypothetically speaking, this were an outcome candle. I'm not saying it is, so don't quote me on this. Hypothetically speaking, this were an outcome candle right here. That's obviously a lot of risk. It's on the weekly time frame, right? You're looking at how many pips is this? 300 pips. What you do is you go to the daily and look in the same area. You usually be able to find a smaller one, and you will just minimize it down to the 8 hour, and don't go below the 4 hour, because if you go below the 4 hour, you're gonna miss the trade. You just want to minimize it down, because if you go to the smaller time frames, you will be able to see the OC. It's going to be a lot smaller. Or let's say if you have a lot of money in your account and you're usually trading, I don't know, 0.1 lot sizes, you can just take the trade as it is, and maybe just instead of doing a 0.1, do a 0.01. Make sense?
Yep, that makes sense. Appreciate that.
And we got 3 minutes left. Just quick about back testing and stuff in general. as you all are studying, I take about 30 minutes a day to back test, just because I always say 30 minutes a day that come your way. You can join these calls all y'all want, but until you actually take time out of your day to back test, you're not going to get it. So leave this call, take some notes, but you got to learn to apply it and identify the setups yourself. Ask questions, be active in the group chat. That's how you're going to learn this. Also, but don't overdo it. You're going to be able to, get out and do other things, because when you overdo something, you're going to begin to hate it. You don't want to hate this. Sakina, you got anything to add?
You pretty much said it over.
All right. Well, this call has been recorded. This is Smart Money Mondays, because it's going to be most Mondays when something comes up, usually around this time. We'll let y'all know in advance, of course, if there are any discrepancies. But, thank y'all for hopping on. Ask questions and outcome reach. More info about the courses coming later. And yeah, I hope y'all have a great rest of your day.
Thanks for hopping on, guys. Be safe.
All right, thank you.
No problem.
Appreciate y'all.
Thank you.
No problem.